Your accountant is a bottleneck and it's costing you more than what you think. You have a controller, you have a CFO, or at least you're paying for them. And yet, your books are always late. Your reports are always wrong. And your decisions are always made on numbers that are at least 2 months old. It's not your controller's fault. It's not your CFO's fault. In most cases, it is your accountant, the person at the very base of your finance function. The one posting entries, reconciling accounts, closing the books is the reason the whole system above them doesn't work. And most founders are paying that person 40-50K rupees a month to quietly bottleneck every financial decision in the company. In this video, I'll show you exactly how that happens, what it is actually costing you, and why fixing this one hire fixes almost everything else. Hi, I'm Kishore Dasaka, and I run a fractional CFO firm for tech startups. This is the most overlooked problem that we see every single time. The first issue is finance function is actually a stack. Now, think of your finance function as a stack. Right at the base, you have your accountant, the bookkeeper, the person whose job is to record what happened, every transaction, every entry, every month, right on time. And above that, you have the controller. Their job is to review what the accountant recorded, to make sure that it is right, and to produce clean, readable financials. And above that, you have the CFO. Their job is to take the clean financials and help you make decisions. Think of things like runway, hiring, pricing, fundraising, and so on. Now, each layer depends completely on the layer below it. The controller can't review what the accountant hasn't entered. The CFO can't advise on numbers that aren't ready. And you can't make decisions on reports that don't exist. So when the base is broken, the entire stack breaks with it. Issue number 2 is what a bad accountant actually does to your business. Here's what this looks like in practice. It is the 15th of the month. You ask your controller for the last month's P&L. They say that the books aren't closed yet. And you ask them why. The accountant hasn't finished posting his entries, so your controller is sitting idle. Your CFO has nothing to review yet. And you are making decisions like hiring, vendor decisions, and pricing decisions without knowing what the last month actually looked like. We've seen founders run payroll twice a month because a duplicate entry wasn't caught in time. We've seen GST entries go wrong because reconciliations were not done on time. We've seen fundraisers delayed because the data room had financials that the accountant hadn't properly closed. None of this shows up as a line item. None of this appears on a report. It just shows up as decisions that you make in the dark. And slow entries are only half the problem. That takes us to issue number 3, where wrong entries are worse than late entries. Now let's understand. A late entry delays your reports. A wrong entry completely corrupts them. And the dangerous thing about wrong entries is that they don't announce themselves. You don't see them coming. And revenue posted to the wrong period, an expense coded to the wrong head, a vendor payment entered twice, a receivable cleared before the payment actually came in. Each of these looks fine on the surface. The books sort of balance, the reports will generate, and everything appears normal until your CFO digs in or your auditors finds the mistake. I've seen a founder walk into a Series A conversation with 3 years of financials that didn't reconcile with their bank statements. The intent was not to hide something. The problem was that nobody noticed that the accountant had been making small errors for 3 years. The investor in this case passed, not because the business was bad, but because the lack of founders' ability to run a clean operation. That brings us to issue number 4. The math founders usually get wrong. Here's where founders make the mistake. They look at the accountant as a cost. 20,000 rupees a month, 30,000 rupees a month, and they find the cheapest option and they move on. But that is not the right math. The right math is this. You're paying a controller, let's say 2 to 3 lakhs a month. If the accountant's entries are late or they're wrong, your controller spends half of their time chasing and correcting the accountant's work instead of reviewing it and improving it. Similarly, you're probably paying a CFO, let's say 5 to 6 lakhs a month. If the books aren't closed, CFO has nothing to work with. You're paying for advisory hours on a foundation that doesn't exist in reality. So the 5-10,000 rupees that you're trying to save on the accountant is actually costing you lakhs in wasted controller time and in CFO hours that can't add value. That is the real impact. And that is one of the most expensive decisions in the finance function. Now that brings us to the question of what a good accountant actually looks like. So what are you actually looking for? The first one is the books need to be closed by the 10th of every month. Not the 15th, not the 20th, but the 10th of the subsequent month. Last month's numbers should be ready before the current month is 2 weeks old. Second, entries should be posted daily, not in bulk at the month end. A good accountant records transactions as they happen. An accountant who dumps everything in the last 3 days is the one who makes errors, misses things, and pushes you close to the date every single month. The third one is they flag anomalies before you ask. If a vendor payment looks off, they catch it. If revenue for the month is lower than what was expected, they notice it and they tell you. A good accountant is not just recording, they're paying attention to the details that are there in the accounting software. They can answer a question about any entry. If your controller or a CFO asks a question about why a particular line item is categorized a certain way, the answer shouldn't be that I'll check and come back. Every entry should have a clear reason. A good accountant at this stage costs somewhere between 40 to 70,000 rupees a month, not the 10 to 20,000 rupees a month. The delta is the best investment in your entire finance function. Your controller can't review what is not there. Your CFO can't advise you on numbers that are not fully ready. And you can't run a company on decisions that are being made in the dark. The accountant is the foundation. And everything about them depends on them getting it right. So now you know why the accountant is the foundation. But once your books are clean and closed on time, what should you actually be looking at every month? Most founders open the P&L, glance at revenue, and they think they've done a financial revenue. They haven't. In this video, I break down the 3 MIS reports every founder should review and the specific numbers inside each one that tell you whether your business is actually healthy. And I will see you in that video.